Hi guys, welcome back to this week's Technical Insight. Last week, MayBank Securities had initiated coverage on real estate management company LHN Limited with a buy call and a 12-month target price of 54 cents. LHN Limited closed last Friday up 1.27% or half a cent to 40 cents, and this represented a 14 cents upside or a potential gain of 35% from last week's closing price. The target price of 54 cents is based on 8 times its estimated PE ratio for FY 2024. The research team says it is a steep discount to other larger hospitality players' average of 15 times. MayBank analysts also highlighted that the stock as a strong beneficiary of Singapore's recovering concert and medical tourism sector. It further projects LHN top line to grow 21.3% from FY 2022 to FY 2025. With a 3-year compound annual growth rate of about 7%. The research house also further highlighted the possibility of a potential special dividend payout should the offer by Shanghai-listed Milky Way Chemical to acquire LHN Logistics and Transportation arm to go through. This, aside from unlocking shareholder value, would also enable LHN to devote resources to other core business segments. Their analysts also like LHN for its expansion plan and focus on moving towards an asset-light strategy, which they believe will allow the group to maximize its growth momentum and quickly build up its market share without overstretching its balance sheet. So let's look at the technical front and see what are the key potential entry levels and key resistance levels to watch out for LHN Limited. So first, let's look at LHN daily charts for the 3 years. The recent high that we saw for LHN Limited share price was the 48 cents level, which occurred during the June period of 2021. Now, this is in the past 3 years the highest price we have observed for LHN Limited. Below this, we have a few resistance levels, namely in the July period of 2021 at 43 cents, we see some major resistance as well. And then after that, we can see that at the 39 cents level, the 37 cents level, and even the 35 cents level, we see quite a bit of resistance. So for the past 2 years, 2021 as well as 2022, LHN Limited share price has more or less been in a downtrend. However, since the beginning of this year, you can see that LHN share price has been on a slight uptrend, connecting the low in May as well as June of this year. We have a pretty strong uptrend line, which could push LHN share price higher. Now, the key levels to watch, of course, will be this consolidation area around 39 cents, 37 cents, and even 35 cents area, where you can see that used to be the previous resistance points in the year of 2022 may have a change in polarity and become a support level or a consolidation zone for this year for LHN share price. Looking at the technical indicators, the latest MACD reading that we have is at 0.001. This is still a slightly positive MACD reading as it is above the zero baseline. The MACD line and SIL line has been crisscrossing each other in the past 2 or 3 weeks. So that could signal that either the stock price now is directionless or we are in a consolidation period. However, nonetheless, with a positive MACD reading and the MACD histogram above the zero baseline, we can still say that there's still a bit of positive momentum in LHN share price limited. On the RSI indicator, the latest reading that we have last Friday is 66.25. Now, this is a pretty strong and healthy RSI reading, and it is about 16 points above the 50-point neutral mark in the RSI indicator. We have also not breached the 70-point overbought signal, which is just 4 points away from the last Friday reading. So that could mean that LHN Limited share price could still have some legs to run, possibly a bit higher to retest the level of about 43 cents, which was the high in July 2021. And that will be the first resistance level LHN Limited share price shareholders should be watching out for before it will push up further to the 48 cents level. So next, let's look at Comfortdelgro. Last week, UOB Kay Hian actually upgraded Comfortdelgro to a buy and raised its target price to $1.41 from $1.27 previously. As expected, the land transport operator earnings to benefit from the industry tailwinds. The new target price implies a 15 times price to earning multiples based on FY 2024 forecast, which UOB Kay Hian deems in line with its stock average long-term PE multiple. While the research house projects that the group public transport segment to report lower revenue and core operating profit in the first half of 2023, the brokerage believes softness in this segment will bottom out in Q2 before improving subsequently. Their taxi segment will present an upcoming inflection point for Comfortdelgro, as its division is expected to register more positive profit margins with reduced taxi rental rebates and a potential increase in commission rates, in addition to its new online booking fee that will be rolled out on 23rd July. Based on the brokerage estimate, a 1% increase in commission rate would raise the company's full-year taxi operating profit by 4 to 5% in FY 2023. UOB Kay Hian's upgrade came after CGS CIMB upgraded its calls on Comfortdelgro to buy from hold on 4th of July. CGS CIMB raised its target price to $1.35 from $1.20, implying a 15.4 times ratio based on its FY 2024 earning estimates. CGS CIMB similarly said it expects rising profits from the taxi segment, with the group's UK operations to return to profitability in terms of earnings before interest and taxes in FY 2023 on the back of government support. Comfortdelgro was trading 1.7% or 2 cents higher at $1.23 at the close of last Friday trading. Recent high that we observed in Comfortdelgro share price for the past 12 months is the 150 level, which occurred in the month of August for year 2022. We also see a next resistance level around the $1.38 level, which occurred during around the period of November last year. Since the beginning of this year, as you can see, Comfortdelgro share price has been consolidating in the first 3 or 4 months of this year, around the level of $1.13 to the high level of $1.23, which was last Friday closing price. And we could say that the last Friday closing price is near a critical resistance level now during this consolidation period. And if prices were to break higher, the next resistance level that we can see is around the $1.38 level, which is the November high that we see last year. And above that, we have the $1.50 high, which occurred in August last year. The MACD indicator, as you can see over here, the signal line in amber is actually converging towards the signal line in blue. And as you can see on the MACD histogram as well, the momentum that we saw since the rise of the year-to-date low to the $1.23 last Friday close, this momentum has actually been weakening as well. And if the MACD line is going to converge further towards the signal line, we may see a crossing of the MACD line below the signal line pretty much soon. And that could signal that a possible change of direction in the share price is likely to occur in the near term. The RSI indicator has also breached above the 70-point neutral mark, which the last Friday reading stands at 71.7. So this means that the RSI indicator is telling us that the current share price for Comfortdelgro is actually in a overbought territory. And then a reversal is also likely to happen, and further consolidation is expected from Comfortdelgro share price. So for traders and investors getting into the Comfortdelgro share price, you may want to consider waiting for a pullback towards the $1.13 level before getting in to target the $1.35 or even the $1.41 level projected by the brokerage houses. So that is the end for this week's technical insights. I hope you enjoyed this video. If you find this useful, do give us a like and share, and I'll catch you again next week in the next technical insights.